Republic Bank is gone. It's gone under and the shareholders don't get a dime. JP Morgan, the largest bank in the country, bought a lot of those assets with the help of the government. JP got a good deal. It probably got most of the really good loans, and the government made sure that it was covered on the bad ones. Now, a couple of other banks, Signature and Silicon Valley, have gone under as well. In each case, the problem was that they made really risky loans, and those chickens have come home to roost. Watch these banks now, the ones that didn't go under, the regional banks. The prices of these are down 50 to 60% in the last 2 weeks. The problem is that people start to pull deposits out of these banks. They don't think they're safe anymore. Now, that's not really true. If you've got less than $250,000 in the bank, you're insured. But what about the big businesses and the rich people? They've got to worry about whether they can get their money back. Even if they can, is it going to be tied up? Can they get to it right away? Have a look at the regional bank stocks. They're getting clobbered. Probably a good short if you like investing. But this tells you something else. The worries about banks are not over. Jamie Dimon said, "You know something? The Republic Bank problem is the last one we'll have." But most people don't think that that's true. They think that people will be worried about their regional banks, they'll pull their money out, and the banks will not have enough money to operate. The regional banks have another problem too. They're the biggest lenders to people in the commercial real estate business. Commercial real estate buildings are often empty. COVID started, people went home, they haven't come back. All those companies and all those buildings aren't paying rent. That means that those buildings aren't paying their mortgages to the banks. And that means that these banks have a second problem, and it's a really big one. Something like this happened before at the beginning of the financial crisis. It wasn't banks, it was investment banks. Lehman Brothers and Bear Stearns went under, and they went under fast. People thought, well, they're small, let's not worry about them. Within a few weeks, every single major bank and financial institution in the United States was in trouble. The government called all the banks and investment banks in Washington and said, "Come on over to the Treasury Department, or the Fed, we've got to talk to you." All these banks need loans that were in the tens of billions of dollars to make sure that they got through the crisis. The only company that didn't was Goldman Sachs. They're really the best run one. But the government said, guess what? You're going to take the money anyway because we don't want to make the other guys look bad. The famous investor Warren Buffett loaned them $10 billion. That's money Goldman didn't need. However, Buffett charged him a huge amount of interest. And guess what? As Buffett usually does, he made out like a bandit. So make out like a bandit. Look at these stocks, go short. If you've got money in these banks, give an idea whether you should keep the money in there or not.